This is the Scrap Metal Commodities and Recycling Report by BENLEE and Raleigh Goldsboro Recycling, June 5th, 2017. Last week, commodity prices were mixed and most economic reports were positive. U.S. steel production rose slightly, continuing the upward trend for about the last 10 weeks. Production is just about where it was a year ago. Oil fell a big $4.50 a barrel, ending at $47.50 on news the U.S. is pulling out of the Paris Clean Air Accords and the expectation that the U.S. will continue to increase energy production. The oil rig count rose for the 20th straight week to 733, well more than double last year's 316 low. There remains great upside since we are still a big 54% down from the 1609 high of 3 years ago. Iron ore fell $4 a metric ton to $56.50, quite a fall in the last 2 months. A very important report in Barron's documented that scrap metal as a percent of China's feedstock in steel furnaces has gone from a small 10 to 11% in the past 2 years to 17% today. We're not sure if it's true, but they wrote that. This could keep upward pressure on scrap prices. Scrap ferrous prices remain steady. Many believe that prices for June will be mostly sideways, with possibly some downward pressure on premium materials. Automotive production has been slowing, meaning less premium scrap is being created, but the trend is not clear. Hot-dip galvanized steel remains steady yet again at $900 a metric ton. Slowing automotive is being offset by higher demand in other markets. Stainless 304 scrap stayed yet again at 36 cents, showing significant equilibrium. Copper rose a penny to $2.58, with there being a balance as in other commodities. Prices are down 3 cents this morning to $2.55 a pound. The 5-year chart shows stabilization after trending down for a few months, which is good for business planning. And copper inventories fell and remained about double, though, of about 12 months ago, keeping downward pressure on prices. Aluminum prices fell a half penny to 87.5 cents, staying near almost 2.5-year highs based on solid demand and steady production. Aluminum inventories, though, hit about new 9-year lows, keeping upward pressure on prices. U.S. vehicle sales continued to decline in May to an annual rate of 16.66 from 16.88 in April. While down, this is still a very big number, but the downward trend is somewhat troubling. Non-farm payrolls increased by a good 138,000 in May versus expectations of 185,000, with healthcare and mining leading the way. While a good number, it is the lowest 3-month increase since 2012, meaning new job creation has slowed. The key unemployment rate fell to 4.3%, the lowest rate since May 2001, a big 16 years ago. The low unemployment rate gets people nervous about wage inflation due to it is tough to find workers with such low unemployment. That's why we like this chart, the labor force participation rate. This reflects all people that are 16 years old and older that could have a job and are working. That actually dropped last month to 62.7%. Less than 63% of the U.S. population that could be working is working. Great room to increase the labor force with minimal inflation. It has been as high as 67.3% in the year 2000. The Institute Supplier Management for Manufacturing Purchasing Managers Index edged up a bit to 54.9, with over 50 being expansion. New orders, employment, and inventories went up as production slowed a bit. Wall Street's Dow Jones Industrial Average hit a new all-time high yet again, which is being driven by terrific profits, the good news on jobs, and the low unemployment rate. As always, feel free to call or email me with any questions, and we hope all have a safe and profitable week.